say. Well, let's get to market figures. My colleague Effiong Ekop is already live in the studio. Effiong, the market is wrapping up the day positive 0.21% according to the figures that I have here. What do you make of that?
Yes, the market remains bullish on the back of results that we've seen various companies sending in, and investors are reacting. Some of them very good, and then they back stocks from those companies. That's the way we see market reaction is positive.
So generally, your overview, do you think that this would be well sustained?
It is really a season. Don't forget, in the last 3 weeks or so, we were trading in the negative territories. And so it is that they are just beginning to look at the positives that are coming. And so it will be sustained. Of course, the market is not always going one direction. And so what we see is a season of investors not holding stocks for a reasonable long period of time, but any window of advantage that they see, they move in, especially to take profits out of it. So the issue of staying one way because of the economy, and so one needs to be rational in a behavior and then relating to what he sees. And so we see a mixture of positive and negative at the same time. But you know, the issue that we are tackling and then the reforms that the government is bringing to the market and the economy, it really directs that many people will respond to, holding huge stocks and other securities in the market.
Any focus on the banks at this time? Any updates with them?
The banks are really doing very well. Majority of them are putting their results, and we've seen their Q1 very, very good. Many of them, they have performed above average expectation.
Indeed, I agree with you.
And we are also having information that a number of them are also preparing to come the second time to the market to raise funds, to be able to meet central bank's recapitalization deadline, which will come up to. So banks are always playing with money. They always want to raise funds. For now, the banks are doing well. I don't think there's any of them that who will tell you that it doesn't make a profit in one way or the other. So
they are indeed making profit.
Exactly, yes.
Well, I must thank you so much, as always, Effiong Ekop, for your analysis. Thank you for joining the program. I appreciate this.
Thank you.
All right, then. Well, let's look at shares of Asian, which rose today after U.S. President Donald Trump flagged the first trade deal in his global tariff war, while the dollar held its overnight gains as market pushed out the chance of near-term rate cuts. Nasdaq futures erased earlier losses to rally 1.1%. S&P 500 futures rose 0.8%. European stock markets are set for a higher open. Pan-European stock 600 index up 0.19%. President Trump's major deal with Britain sent FTSE futures 0.8% higher. MSCI's broadest index of Asian Pacific shares outside Japan edged up 0.3%. Japan's Nikkei gained 0.5%. Chinese blue chips 0.7%. And Hong Kong Hang Seng increased 0.8%, recovering ground lost since Trump's Liberation Day tariff last month. On Wall Street, stock rose. Reports that the Trump administration was planning to modify a Biden-era rule that curbed the export of sophisticated artificial intelligence chip. Now to crude oil prices now, so that we wrap up the show. Let's see what the crude oil prices are looking like now. The crude oil market rose today after falling more than $1 in the previous session, supported by hopes of a breakthrough in looming trade talks between U.S. and China. The world's two largest oil consumers, U.S. West Texas Intermediate crude rose to $58.50 per barrel, with an upsurge of 0.74%. Brent sells for $61.50, with an upward margin of 0.62%. Bonnie Light sells for $78.62, with a downward margin of 2.84%. For the OPEC basket, dealers offer $61.81. It has an uptick of 3.26